In this video, I'll be covering my portfolio changes for the week. Highlighted in yellow here are my buys and sells, 5 changes this week. Starting off with agriculture and the changes there. If I go down the list looking at the weekly charts of soybeans, corn, wheat, and sugar, they're all at attractive levels, and cycle analysis is showing that these are bottoming. So in the broader commodity cycle, I think getting exposure to these markets directly are a good addition to the portfolio to soften volatility, right? These markets won't double or triple like some of the stocks can, but I don't think they'd significantly underperform either if I'm early. It's also a smaller weighting for now, and I try to consistently employ dollar cost averaging over time to mitigate timing risk and maximize return. So I picked up more soybean through SOYB and established an initial position in wheat, ticker WEAT. I'd rather spread the bets over the different markets than try to guess which one will outperform. I did consider using the TAGS ETF, which is just a basket of these, but I don't like how illiquid it is. Now, I also bought 2 tranches of Millennial Potash, ticker MLP.V on the Venture Exchange. Before I get into the company, the reason I bought now is I've been following the stock for a while and missed buying the last pullback in November here. It just wasn't on my radar, and I wasn't as confident where potash was in the cycle. If I flip to NTR, it broke out above this base and the 200-day moving average. I'm taking this as a signal for potash, so I decided to pull the trigger on buying Millennial Potash. The gist is that it's a large, low-cost potash discovery in West Africa. Ross Jennings, who is a private equity and mining investor, writes a lot of research about the stock on Substack. I'm showing his Substack on the screen here, so you can find more info there. He owns around 25% of the company and has a price target around $10 to $12 Canadian, and it's currently at $3.30 Canadian. So with that breakout in NTR, I'm comfortable getting exposure here, and this will likely be a multi-year hold unless it accelerates quickly. And I want to pause here a moment and just explain something. I try to always have a compounding view on positions. I'm not typically trading these positions, but sometimes it makes sense, and here's why. This is a comment on me saying if it accelerates quickly, then maybe it won't be a multi-year hold. So to paint the picture really quick, let's say I think a stock has 5x upside over a 3-year period. Well, if that stock goes up 2.5 times in 6 months, then I'm now holding a potential 2x from there for a 2.5-year period. That's a long time for a 2x in a micro cap riskier stock. So I might choose to sell instead and move that money into another position that I think has a 5x potential over that same 2.5-year period left with the same amount of risk or maybe even less risk. So basically, the return multiples reduces as the stock multiplies. And I don't see this angle discussed by many investors and traders. Most just say to hold the stock for the 3 to 5 year period, and that's how you get the 5 baggers, 10 baggers, 20 baggers. But if something goes up a lot really quickly, then why take the continued risk versus moving it into something else like Exxon or Chevron that I think might 2x over that same 2.5 year period? So I'd rather do something like that, even if it means I don't hold the stock for the full duration and just reduce my downside risk. Okay, enough on that. Moving on to the SILJ calls, I thought about it for a long time, and while I'm very bullish on silver stocks and I have many in my portfolio, I'm not comfortable holding call option leverage on the ETF. Here's a comparison chart of silver, the ETF SIL in blue, and SILJ in green. This isn't the best representation, but in the 2010 run-up, the stock stalled as silver ran to its peak. And as I scroll through time, you'll see the performance shift between outperformance and underperformance. It just depends when you get in. Now, obviously, this was in a bear market, and the spike in 2016 was definitely some exuberance. But in this latest rally, the performance is about on par so far, as you can see. So I can totally see the case for the ETF outperforming with the cash margins they'll post at these very high silver prices. But I think the price of silver is closer to an intermediate peak than not. And I'd rather bet on silver directly or do stock picking than bet on the broad ETF for leveraged exposure. I could totally be wrong here. SILJ could outperform from here, and perhaps in hindsight, I should have held on to them. But I don't have FOMO, so I'm okay getting rid of them because I do have a bunch of silver stocks. Lastly, I started a position in MSTR. So here's a few points on it. I like Bitcoin here for at least an intermediate term rally. And I showed these charts a while back, but the Bitcoin to silver ratio is tapping on this long-term trend line, indicating that Bitcoin should outperform from here. And I'll show gold. Gold isn't all the way to that line yet, so perhaps gold has a little bit more outperformance. And Bitcoin doesn't have to bounce here. I mean, this doesn't mean it's going to bounce or that Bitcoin is going to outperform. It's just a data point. And if I flip back to MSTR, it got close to its 200-week moving average here. It's into this support level on the chart. I put a line there so you can see it. And they're trading at a slight discount to NAV. And don't pay attention to those saying they're trading at a 20% discount because their holdings are at 65 billion and the market cap is 50 billion. That doesn't consider the full dilution, the preferred equity, and their debt. So we'll see what happens with that position. I'm not sure if Bitcoin is going to rally a lot from here or if it's going to continue down through more of a bear market. In any case, I'll probably manage MSTR as a short-term trade versus a longer-term trade. So if we do break the lows here and start dipping more, I'll probably get rid of it. But I'm just looking for a 20 to 40% gain. That's all for this video. I post all my transactions in real time on X. My handle is LionEyeYouTube, link in the description. And subscribe to the channel for ongoing portfolio updates as these markets unfold. Thanks for watching. See you in the next one.